Good morning, it's the Friday breakdown. Well, there's no way out of it. Rising yields across the board, falling equities, Gaga's dog stolen US markets seem to be in trouble, especially considering that she's running a huge reward for the dog's retrieval, but not for apprehending the guy who shot the dog walker. St. Louis Fed head Jim Bullard ascribes the rise in bonds to an upcoming inflation boom. The 10-year T-bill jumped 10 points, landing at 1.497% yesterday. Its futures, however, are down 1%. Bloomberg interviewees believe Fed fund futures are pricing in an interest rate hike in 2022 and two more in 2023. They suggest the Fed address market concerns of a premature withdrawal of Fed support to calm markets. Meanwhile, the dollar is up after jobless claims improved considerably, but consumer spending fell off a bit and pending home sales contracted by nearly 3% in January. According to the LA Times, COVID has lowered rents in inner cities like San Francisco, and tenants are returning rather than buying houses in the suburbs. And our preliminary GDP reading for last year's final quarter has increased slightly to 4.1%. Not as much as hoped for, but still the strongest in decades, according to New York Fed President John Williams. Not that regular Joes will see much of that. The Senate yesterday quashed Democratic hopes of increasing the minimum wage to $15 an hour, making Lindsey Graham very pleased, I quote. Major European indices also had a hard day yesterday, the DAX closing down 0.2%. The EU published favorable sentiment measures, consumer confidence up a point, but still a negative 15. Likewise, services and industrial sentiment. This morning is seeing improving import prices in Germany, but miss on French Q4 GDP as well as a 4.6% decline in consumer spending and a two-tick drop in consumer inflation year on year. That's clearly not enough to reverse this downtrend in the 10-minute euro-dollar, even though the RSI is showing some optimism, and an optimistic eye could see an ever so slight flattening in the MACD. Also, I'd like to believe in the Morningstar formation at the tip. Whatever the cause, for now, support at 121.35 just may hold. Reuters this morning reports that Chinese factory activity is slowing following New Year celebrations last week. Chinese benchmarks continued down this morning, as well as the Nikkei, hardest hit with a 4% drop. Basically, we're seeing a record 9-month drop across the board. Japan's consumer inflation still negative, improved by a tick to minus 13%, while industrial production in January soared by 4.2% month on month. The Aussie yen pair seems to be the most dramatic at the moment. As you can see, it's pretty much oversold, and sometime towards the Asian Open today, we would see if our next target, that's 82.039, is holding up. For now, there seems to be just enough selling volume to maintain the trend. Retail sales in Japan dropped from 2.4% from minus a fifth in December. National banker Haruhiko Kuroda indicated a slowdown in assets buying, saying he wanted to keep the yield curve low. At present, U.S. fiscal spending is bolstering Japanese notes as well. The 10-year is at a 5-year high as the government says it'll rescind the COVID state of emergency by month's end. Oil is drastically down on a soaring dollar this morning as a U.S. intelligence report prepares to declassify its accusations against Saudi Arabia's Mohammed bin Salman for vetting the murder of Washington Post columnist Khashoggi in October 2018. Yesterday, President Biden held a preparatory phone call with bin Salman's father, King Salman, and Coinbase yesterday announced its IPO could take place as early as March. At yesterday's congressional hearings, lawmakers concluded there was no need to regulate cryptos against terror funding since there was already regulations in place for that, not just targeting cryptos. In corporate news, the online disruptors are at it again. GameStop shares got double-digit gains yesterday to hit $160. While for Boeing, well, they can't get a break. Yesterday, the FAA fined the company $5.5 million on fuel tank fire hazards in 747s and 757s, which they failed to address in 2015. In earnings, Moderna revenues in Q4 grew 40-fold from $14 million to $571 in a 3-month period. However, operating expenses also shot up, leaving shares with a 69-cent loss per unit. HP reported a more moderate 7% increase in revenues to 15.6 as EPS soared 80% to 83 cents. And Beyond Meat revenues were up 3.5 to $101.9. They're expected to shoot up a whole lot more after yesterday's disclosure that both McDonald's and Yum Brands, that's Kentucky Fried, Taco, and Pizza Hut for you, they'd signed a deal with them as preferred suppliers. Deutsche Telekom profits nearly tripled to 1.67 billion euros. Airbnb revenue fell by 22%. Salesforce added 20% to 5.82 million. And Dell's 9% year-on-year improvement to $26 million left share earnings soaring by 191% year-on-year to $1.57. Well, a lot of info to end the week on, but that'll give you all something to think about Saturday and Sunday. We will see you Monday.